Okay, so I'm starting to record now. Let me share my screen. Okay, so the purpose of this boot camp is, um, over the past year at Ghost Squawk, we've just been adding so much to the subscription because we want to give you guys like the best value for your money. Um, and so for the same price, we've added a whole shitload of stuff. And most of like when I talk to people, they're like, indicators, you have indicators? Like Guslit, for example, like I was talking to him like this weekend and he's like, what? And this guy's been in our program for like 6 months or something like that, or maybe three. But the point is I want you guys to like understand how all the services that we have and how to use them. So, all right, enough talking. Let's get to it. So what I have like a brief little motivating section on trading and entrepreneurship. Also talk to you a little bit about the Ghost Squawk origins. Trading with GSAI, that's our what we call our news service. Obviously the Kovac indicators. Some of you have had great success with that already. Heard a lot of great feedback from some of our users. So just want to make sure that you guys understand them. I have some introductory type videos, but we'll take a little deeper dive into them today, and of course open it up for questions. And Chen will take over when we start talking about the Ghost Squawk terminal. It's a very, very useful tool. It's actually part of the freemium service. We're going to start adding paid features to it really soon, which you guys will obviously have. But for now, we can just discuss what you can do with it already.
Yeah, I'll take over near the end or like 2/3 of the way in and show you guys how to use the terminal.
Yeah,
Lot of useful functions and features out there.
yeah, and just to compare it, like a Bloomberg terminal is $3 grand a month, a Reuters terminal is 1,800 a month. And clearly, we can't do all the things that they can do, but most of that stuff you probably don't use anyway. So the major things like Fed rates and Treasury yield curve and stuff like that, you could do straight from the Ghost Squawk terminal. You don't need any of those services. All right. So just to start a little bit, as a trader, you're an entrepreneur, right? So you have to think of this like operating your own business. And there's a lot of aspects that you don't necessarily consider to be part of the business. Like, for example, when you take losses, if you're doing your risk management properly, losses will happen and you can't get beat up over it. However, you want to obviously make sure that those are in your risk management parameters. And that's kind of like what I consider like an operating cost. So just because you lost on a trade doesn't necessarily mean it was a bad trade. It's just part of the game. And of course, be careful because you will take on more risk than average, right? So trading is it is a business, but it's a little bit more risk than some of the others. Some of the benefits of entrepreneurship, and sorry for the font here. I'm going to try to find a way to make it into columns, but it's auto compressing it. But anyway, with your cash flow is unlimited, and you should be considering multiple sources of income. So with other positions like a job, for example, I like to say that there's essentially three models of making money, right? So the first is you work as hourly, right? So your compensation is directly proportional to the amount of hours that you put in. There's a salaried model where it's fixed. So however many hours you put in, you only get a fixed amount. And both of those are capped, right? Even if you're an executive at some company, your compensation is still capped at some point, right? With trading, that's not the case, or just general entrepreneurship. And I added this section, a little bullet point on multiple sources, because what I noticed about a lot of traders is that they're successful not only in trading, but in other things too. So we have a lot of like entrepreneurs and business people who are looking to add to their sources of income. And so when you start getting successful in trading, you can start thinking about other avenues for income, like for example investing in a business, or real estate or something like that. We have a lot of people who are doing those things. So just consider that you want those multiple sources of income if possible, because if you have a bad run or whatever, you still have some other sources to consider. I know that's might not be something that you guys can do like right away, but that's kind of the goal. The moment you set these goals and you set your mind on something, the universe will just accommodate that, right? And it's just a matter of getting there. So that's what we're here to help you with. Passion, typically entrepreneurs have a passion for risk and a passion for the markets. All right, this is in the context of trading. This is something that you can't just do on a 9 to 5 type thing and say, oh, I'm done. This is something you really need to be passionate about, because it's the old saying, like, if you love what you do, you never really work a day in your life. So you're constantly looking at the news sources, constantly pulling up charts and stuff like that. And that shouldn't really be work to you, right? Because you should be liking this type of thing. So of course, there's a knowledge. You need a thorough knowledge of the markets. We have a 12-week program that is really, really comprehensive. It's $1,500. So not everybody can afford that. So what we've tried to do is kind of you know basically come to an accord with you guys on with our bi-monthly boot camps. Okay, so what we have in kind of you know uh, like a compromise is the 12-week boot camps, which come with, sorry, the bi-monthly boot camps with which come with your subscription. Okay, so this is one of those, and we have others on forex and stocks and other things. So understanding of risk management, and this is really important too. I think is the most important aspect in trading. Okay, so when you learn risk management, you start applying it to other aspects of your life. Okay, so it's not just about the trade and the profit target and the stop loss and things like that. You understand that in life, you have to risk something to gain some other thing. Now, that risk could be in terms of money, it could be in terms of time, it could be in terms of your emotions. Okay, but it is still, you could go about life in terms of good risk management. And it applies to other business areas and in life in general. So the potential pitfalls, well, just like your salary is uncapped, um, you don't really have any salary at all per se. Like nobody pays you to sit there in front of your computer and watch the markets. Okay, it's your job to eat what you kill. You are exposed to risk, and so you don't want to risk what you can't afford to lose. But that risk could be mitigated with adherence to risk management. Okay, and I've talked to you guys. I try to bring this up in the channels, just so that you guys don't like YOLO into a trade. Um, you know, Someone once told me that you always consider your exit before you consider your entry, and that's just a life lesson in general. But the same is really true for trading. Okay, so you don't want to enter a trade that you have no idea. You just kind of Ouija board your way through the trade. Okay, you should have very, very solid risk management. I've been working with Emerson on this, because if I could blow you up for a second, he's come a long way. Used to ape his way into trades and get stopped out and stuff like that. So we're working on risk management. That's just one example, right? I try to help everybody in the channel with that. Um, the risk can be mitigated. Okay, so again, the risk can be mitigated with risk management. Can't really repeat that enough. And of course, you want to avoid scams. This is kind of our problem. Is that we have to distinguish ourselves from these other assholes out there that are basically just scamming you. Okay, so if you see these pictures on Instagram or something like that with a dude with a Ferrari and whole stacks of money, he doesn't own that Ferrari. He rented it, or had a friend that has it, and that's not real money. He just printed it out. Okay, maybe hired some models around him or something like that. This is not something that when you see people doing that, they're very clearly just trying to scam you. Okay, and I've seen this multiple times. It's very easy to appeal to people's greed. Okay, and to get them to do things that they otherwise wouldn't do. So that's one of the things that we try to fight very hard to earn people's trust here at Ghost Squawk. And so we try to contribute in the freemium channels just so people have a place where they're safe. And that's why we're pretty active about banning people who do any kind of spamming or anything like that, because we want this to be a safe place for everybody. So your path as a trader, put this together. It's a little funny, but it's true. Okay, so the first trade, you have no idea what you're doing, right, when you start. And that's very common. Okay, and that's okay, right? You have no idea what inflation is or central banks, technicals. So you're starting from nothing. Okay, and then you have a good trade. Then you have maybe a second good trade, and then a third good trade, and you're on the moon, right? And then all of a sudden, it's like, oh, that's what a stop loss in reality sets in. Okay, so then you think, okay, this might be harder than I thought. And then eventually you get to the point where you're tested, right? You tested and you say, is this right for me? Okay. And that's, everybody goes through that. And you may blow up an account. We try to enforce people using the sim or the virtual trading as long as possible, because once you have emotions, the emotion of having real money on the line, okay, that's a lot different than trading sim. Okay, so when you have sim, you understand that it's fake dollars and you could just re-up it at any time or just continue or whatever. But it's still important that you get the technical aspect of it, placing a limit order, learning how to read charts, because if you don't know how to do that, or you haven't mastered that properly, and then you add the emotional component on it, it can be disastrous, right? So then if you keep through it and you stick through it, and you keep watching on the channels and asking for help, eventually it starts to come to you, right? Risk management, okay? I'm not telling you that it's easy. This is very, very difficult. Okay. And then typically you might have a second dip that we haven't pictured, or a third or a fourth. And then finally you start to get the hang of it, but you realize that this is, it's pretty difficult. And I don't say that to discourage you, because we're here to help. Okay, so the origins of Ghost Squawk, this originally started, all of these things started as services that me and Shen used ourselves. So if you ask us if we're selling snake oil, well, we're not, because we're using it ourselves. Okay, and I've known Shen since like 2013, 2014, thereabouts. And, my background, I have a lot of background in like math and AI and stuff like that. So basically, I applied those skills to trading. So that's where all these tools came from. This ran Ghost Squawk, the news service, ran as a program on the desktop, and it evolved into a website and a Discord community with free and paid services. So because we have so many products and services that we offer you, we don't call it the Ghost Squawk subscription. We call it the Ghost Squawk ecosystem, right? Because it's an entire collage of a whole bunch of different products and services that you guys can use. We're going to discuss a little bit about each and every one of those. So what is the Ghost Squawk ecosystem? Actually, first, let me just, if you guys are wondering why we call ourselves Ghost Squawk, it goes back to here when I was developing this, and I was developing the news service, and I had it. We're very proudly state that we started as just two dudes in basements, because we basically did that. We were just trading and working on this stuff from our basements. And at the time, my office, so to speak, was my kitchen. So I'd leave the program running, and there is a squawk component to it. Whenever you hear the word squawk in finance, that is a person who reads the news to you. Usually it's in English, and usually they're pretty expensive. Okay, so you're trusting that that guy knows what's important to read to you. Okay, so this squawk is automated, right? And starting with version 2 of the website that's coming out in April, it'll be reading in multiple languages too. So you don't have to speak English. English doesn't have to be your first language to get the news. But anyway, I would leave the service running. Sometimes I'd forget to turn it off. So my girlfriend at the time would refer to it as the ghost in the kitchen. But of course she wasn't so affectionate about that term when it would go off at like 3 a.m. So that's the history of it, why we call it Ghost Squawk. Anyway, so on with the Ghost Squawk ecosystem. Okay, so this is a news aggregation service. That's kind of like the primary value added, to your experience, right? It is the news aggregation service. And we have it for traditional markets and for crypto. So if you're a crypto trader, there's a component as well. There's obviously the audio squawk that we just talked about, the proprietary risk on and risk off news sentiment indicator. Okay, so I know that's a lot of words, but basically what I do, what Ghost Squawk does, the Ghost Squawk news service, is it reads in those breaking data that you would otherwise have to pay for Reuters or Bloomberg, or have like 50 different tabs open for all these different news services. So it aggregates that all for you. Okay, and additionally, I have a AI that basically reads that news, and it determines whether we are risk on or risk off. So if those terms are new for you, that's basically a measure of the fear or the greed in the market. Okay, if we're risk on, that means investors are greedy, right? They're hungry for risk. If we're risk off, on the other hand, that means that they're pulling back a little bit and putting assets into things like safe havens, bonds, and so forth. And so this indicator is really going to help you understand where the markets are at a given time. There's proprietary technical indicators. I've had most of you have signed on to it. If you haven't, okay, and you have the Ghost Squawk subscription, please send me a direct message with your TradingView user ID. Unfortunately, we do not have these indicators integrated into our website yet, but we're working on that. So for now, you have to use TradingView. We don't have any fiscal relationship with TradingView. You don't have to get the the paid plan. They do have a free option. But I think that they limit how many indicators you could put on a screen at any given time. But that being said, if you haven't signed up for these yet, please send me a direct message. We have bi-monthly trading boot camps. And again, we're doing that because, it's kind of a compromise to you who can't necessarily afford the 12-week program. The 12-week program is very, very comprehensive, and it's very, very thorough. Okay, so the boot camps are more targeted at certain trading styles or opportunities. We have real-time language translation. Again, that's coming soon. Okay, so that should be in the second version of the website. Daily trading live streams, that's with Chen, and daily commentary. Sorry, this got cut off. Daily commentary on 8 assets, traditional and crypto. So basically, with that commentary, you should be able to trade any product. Okay, and because basically I take one of a product from each category that's highly correlated with the other. So if you're trading bonds, you care about what the 10-year is doing. If you're trading forex, you really, really care about what the US dollar is trading, because that's where the major pairs are. A major pair is some currency paired against the US dollar. If you're in crypto, you care what Bitcoin is doing, and so on. Okay, so the Ghost Squawk news service. Again, we call this Ghost Squawk AI, and this provides headlines in real time. And I've gathered these from a variety of news services. Okay, so we have just news sources like Bloomberg, Reuters, Market Watch, all those things, RSS feeds, and Twitter. And so what we do, what our value added here is the risk sentiment analysis. So what is that? Okay, so let's take a look at what the Ghost Squawk, the dashboard looks like. Okay, so basically we have this histogram here, and that's like what we call the riskogram. Okay, so what we do is we take all of the articles that are coming out at a given time, and we kind of look at where they lie on that spectrum. Are they risk on or are they risk off? Okay, and based on where the majority is lying, we can come up with this kind of histogram to give you a feel for where the sentiment is in the markets. Okay, additionally, you'll see some the headlines down here. So basically, let's start from the beginning. Over here at number 1, we have a numeric measurement. Some of you are a little bit more, you want kind of a number to work with instead of more of a visual. So to accommodate that, we have an indicator here as well as one in the top center. Okay. 2, when the news breaks, the new news will be highlighted in red. 3, we also have the timestamp when it came out. 4, there's a mute button in case you want to sleep and you don't want to anger your significant other like I did. You can, you can mute it here. And of course, here in the center, we have the riskogram. So again, here is just kind of a reference of what these points are. If you revisit this later, again, we're going to be posting this on YouTube. Oops. Okay. So again, what is risk sentiment and why should I care? Okay, so risk sentiment is the investor's appetite for risk. Okay, and that drives all markets and trading. Okay, so again, you can think of it like fear or greed. And there's 3 modes. Okay, so risk on means we're hungry for money. Risk off means that we're pulling back out of these riskier trades and we want to go into something a little safer. And of course, neutral is kind of flat. Okay, so the risk sentiment is an indication of the tone of the markets. Okay, so if you fell asleep for all that, just remember that risk sentiment is an indication of the tone of the markets. So risk and assets, different securities react differently to risk on and risk off environments. So in general, with a risk on sentiment, stocks are going to go up, bonds are going to go down. Okay, so that's just a general point. Of course, there are some finer points. You have to take into account what the Fed is doing in fiscal stimulus nowadays and all that. But that's the general principle. Okay, now with currencies, it varies. Okay, so your safe haven currencies, things like The Japanese yen by itself and the Swiss franc are going to like a risk off environment. Okay, things like the US dollar might prefer a risk on environment, or it depends on the sentiment because sometimes it comes in terms of safe haven flows. The Ghost Squawk risk sentiment, again, that's a proprietary machine learning algorithm. It has been trained off of thousands of real examples. It took a lot of work to do this, guys. Okay, so I took for years, I was collecting with Chen. We were collecting samples of what we consider to be risk on, risk off, and neutral. Okay, so we train this thing off of those real examples, and it evaluates real risk on or off sentiment in real time. So that's what's really cool about this thing, is that as the news starts pouring in, we're evaluating that in real time. So let's take a look at some examples. So if risk this is in terms of the numeric indicator. So if you guys are a little bit more just numeric, you want that number to look for, this could help you. Personally, I like looking at the riskogram, but we have both. So note when risk on and risk off numbers are roughly equal or equal. So this is a good example of a neutral climate, right, where the risk on and risk off are exactly equal. But of course, we don't necessarily have to have it be exactly numerically equal. We could have unequal, but the amounts are small. Like the difference between 9 and 11 is not so bad, right? So as you become more familiar with this, you're going to start to understand these concepts. So, if this is kind of a little confusing right now, don't worry, don't be scared, because we're going to be revisiting this over and over and over and doing these orientation boot camps more often. So you can start to get a feel for it and ask questions and stuff like that. So here's an example where the amounts are unequal but large. Okay, so what I mean by large is like greater than 20. So if the comparison between risk on here and risk off is really great, okay, that is a very, very clear sign that we are in a risk off environment. So the next tips on reading the risk sentiment indicator: understand the respective meanings. Okay, so here markets are neutral. This is completely, exactly, numerically equal. Okay, here the bias is too small. Okay, so what that means is that, okay, it's not exactly on par, but it's not really enough to care. Okay, because the markets care about how far we are outside of expectation. That's what's going to move the markets, not just a numeric value that's just like a little bit off center. What we care is the risk on, risk off bias, whether these numbers are slighted to the risk on side or they're slighted to the risk off side. And again, the riskogram can really help you determine that. Okay, so this shows the distribution of risk in the news. And of course, we color it to kind of help you understand when things are either very risk off. Oops, this should be, sorry about the emoticons. Let me just change that. So risk on is hungry for risk. Risk off is we're frightened. Okay, so on the -3 side, on the very left hand side of this riskogram, you're going to see -3. That's very, very risk off, very risk averse, very scared of what's going on in the markets. On the other hand, we have +3. That's the opposite side of the spectrum, in which case we are very, very risk on. And of course, 0 is neutral. Now, if you notice, most of the articles that come in tend to be neutral, because you see a lot of stuff like Goldman Sachs outlook for the markets in January 2021 or something like that. And so that's not really telling you anything specifically in the headline. So, that's a risk neutral type of headline. Okay, so let's look at some real life examples. All right, so here's an example from October. And as we advance here, I'm going to be including more more real life examples that happen as they do. Okay, so we have again, this is from October, but we see this is bonds. So this is in real time. Okay, so this is not something that this is going to be affecting your trade right now, and these are 30-minute charts, right? So I gave you kind of a broader picture of what's going on, but this little bump here was due to this risk off tone. And these are actually the charts that I use to trade, hence why there's all these levels and stuff like that. Similarly, for stocks, we see a big dip in stocks with that risk on sentiment. So here's an example where we have risk on sentiment, whereas the previous example was risk off. Okay, so again, with risk off, investors are scared. With risk on, they're hungry and they're greedy. Okay, so with this, we see stocks going up, and I didn't include the bonds one. Sorry about that. But we have okay. So the next one, again, another example where we are very risk on. No, we have hardly anything over here on the risk off side of the histogram, or the riskogram as we call it, and virtually everything is over here to the right. So that was why we had this nice little bounce here in stocks, nice recovery. Finally, we have risk neutral. So if you see here in the riskogram, we're roughly even. Okay, so we have a little bit more on the extreme risk off side, but there's enough risk on news to kind of balance it. Okay. And then we have very, very risk off. So this is how it evolved during the day. So we see risk at 8 o'clock, we were risk neutral, but then all of a sudden the sentiment shifted, and we basically see how that turned. And this is why you want to be following the product closer to open. Okay, so what's going on here? What's significant about 8 a.m.? Well, nothing really, except it's getting closer to open. Okay, so when we get closer to the US Open in particular, we're going to start to really care about how this riskogram evolves. Okay, so if it's risk off, hour or so before the open, we can anticipate maybe that the markets may open lower, the stock markets. And so here, sure enough, we see it kind of trending down. Here at 10 a.m., you see that we are still very risk off. Okay, so investors are still scared. And what do you know? We have a breakdown. Okay, so this is a very, very good indication of the direction of the markets in real time. It's not always perfect. I'm not gonna lie to you about that. Sometimes markets do market things, but it is a tool. Okay, it is a tool to help you prepare for a trade. Don't think of this as a buy or sell signal right now. Think of it as a trajectory. This is where the markets are going today, and it can help you set up your trade. So by 11, we're still risk off, and sure enough, the markets are still dumping. And of course, by 2, that was a particularly bad day. By 2, we're still in corrective territory. Okay, so the conclusion here is that the Ghost Squawk news service can provide value in trading. Okay, and again, it does that by helping you to understand how the news impacts the markets. So various tools give traders an edge: proprietary indicators, risk sentiment indicator, news and aggregation, the news aggregator, and audio squawk, and educational services. So each one of those things should at least keep you, even if you don't understand how to read the risk sentiment indicator just yet, it's okay. It takes some experience. At least you have the news on hand, and the audio squawk only reads the important news, right? So if you're in your kitchen cooking or something and you have it on, and all of a sudden you hear something like, a new coronavirus outbreak or stimulus plan released or something like that, that will come as a breaking news event, and you could be prepared to trade that. Okay. And of course, for more information, just go to the website. Okay. And you should be able to log in. The truth about indicators. Now we're going to discuss our indicators. Okay. And it's really important to understand that these things aren't magic. Okay. They just do math on the charts. And by that, I mean, the data is already there. The information content is already in the chart for you. The indicators just help you to see it. Okay, so with experience, you can garner all that you need directly from the chart. Indicators just serve as a confirmation. And so you don't want to fall victim to the flaws of many indicators. We'll get to that in a second. So again, coming from the guy who wrote the indicators, I'm telling you to just be careful, because you don't want to rely solely on them. Because I'll give you an example. I was in a trade one time, a bond trade, and all of a sudden I found myself $2,000 offside because a Trump tweet broke out. Okay, and those of you who have been trading for a while are very familiar with Trump tweets and what they used to do to the markets. Okay, so don't rely solely on the indicators, but together with the news service, right, and trading with Chen in the morning, you have as complete of a picture of the markets and what they're doing that we could possibly give you. Okay, so we're doing everything we can to at least prepare you and give you the most information. So a beginner mistake is to put too much faith in indicators. Another beginner mistake is to overwhelm the chart with indicators and other technical analysis. So you want to avoid what we call analysis paralysis by having too many indicators. Here's an example of that. Okay, basically, you can always tell a beginner chart when they have when the chart pattern is this tiny little strip on the top and the rest are just indicators, right? So you want to avoid doing that. And that was the motivation for me creating these indicators, because I don't want you to have a whole shitload of indicators on the charts. I only want you to use like 3 or 4 at most. Okay, so that's what that's what led to or motivated me to create these indicators. And again, I did that for myself, right? So I don't have to have a bunch of indicators on the charts. So we'll talk a little bit of brief history, the types of indicators offered, what they mean, and most importantly, how to trade them. Okay, because we're not here for academic knowledge. We're here to learn how to trade and make money. Okay, so the history of this, these indicators were named after the coolest guy I know. And it also helps to find them on TradingView. Okay, so it's not just for my own ego. It is to help you kind of see them all in one space. And this started out just as a simple programming project. But again, the purpose was to mitigate the shortcomings of indicators. Okay, a lot of them tend to be they have a lag, right? So they take in data that came from the past, and they do some kind of averaging on it, so that the data point that they give you isn't necessarily the most up to date. Okay, so what I did is I applied a lot of signal processing and math and AI and that kind of stuff to all the hard stuff. I did all that work for you with these indicators. So of course that took a lot of experience and really hard work. Okay, because I'm not going to tell you that I just pulled these out of my ass and all of a sudden, they worked. It took a lot of experience and a lot of tinkering to get it to work right. But we're very proud to release these to you in their current form. So the indicators that we have 3 momentum indicators. That's the OBV, the Chand, and the momentum, volatility indicators, and crypto specific indicators. So momentum indicators, if you guys understand how to use these properly, they can be very, very helpful in your trades. I know that a few, I know that Emerson in particular has been getting really, really good with these indicators and has been working out really well for him. Sorry to keep name dropping you, Emerson. But I'm actually very proud of how far a lot of you have come. So these measure price action with volume. In physics, we have velocity and mass, right? Well, we don't have that in finance. We have change in price and we have volume. So that's what we mean by momentum in the context of trading. Okay, so signal processing techniques help mitigate the noise. When you have crazy, crazy markets, again, the indicators just do math on those charts. Okay, so when the markets are really volatile, how do you get at the real signal, the real message of what the markets are doing? Well, you have to use some kind of fancy signal processing stuff, and again, that's handled for you. Indicators work on different time frames, so let's get into that a little bit. Now we're going to take kind of a little deeper dive into the momentum indicators and how to use them. So first we have the Kovac OBV. That is the long-term momentum. Okay, next we have the Chand, which is like a mid to short-term momentum, and the Kovac momentum, which is a very short-term momentum, which measures large price spikes. Now, why would that be important? Well, there's 2 times that commonly happens. Of course, there can be some others as well. Number 1 is the open. Okay, so when the market's open, I like to call it the hungry, hungry hippos game. Like for those of you who are old enough to remember, maybe I'm showing my age here. We used to have this game as kids where basically you'd have a little circle and everybody had a hippo, and you pounded on this controller as hard and frenetically as possible, and the hippo ate the pellets, right? So those with the most pellets won. So that's kind of how I view the open. Everybody's just pounding on the buy and sell button, just going crazy. And that can often cause a large spike in the markets. And of course, the other one is when we have a data point like non-farm payrolls that we had recently. So here's a good example of the Kovac OBV, the Kovac momentum and its significance. Notice that we had this, this is S&P futures, right? So this is stocks. So we had this huge spike in the Kovac momentum, and notice how the markets responded. So just by this spike, this huge buying frenzy in the morning, we could potentially position ourselves for a great trade as the day evolves. Because even after this thing kind of subsides, the impulse really happened here, and then it kind of dies off. We still had a while to ride this trade. So if you're wondering where the momentum is going in the morning, if it's to the buy or sell side, this is a really great indicator to help you. Similarly here, we have a nice, what we call open drive pattern. Next, we have the chand. Okay, the chand is really cool because it helps identify the peaks and valleys. So buying and selling in the markets is much like a pendulum. Okay, so when here the investors have a buy side bias, obviously the stocks are going up. So what we see is the pendulum swinging back and forth, right? Investors buy, and then they start to take profits and they let up the gas. Okay, so as you see this buying frenzy, we see this uptick. All of a sudden, we see this kind of rounding off type pattern, and then we see the pendulum swing the other way. So that's kind of good at helping you identify maybe potential buying opportunities. Okay, it's very difficult to understand where you have a dip versus a reversal. And I'm not claiming to solve that problem for you. I'm just claiming to give you a tool that might be able to help you. Okay, there's always risk in the markets. There's always risk that some asshole is going to come in and just dump, or some news event or something like that. I'm not a magician. I can't help you with that. But what I can do is set you up in the best possible way to make a good trade. Okay, so basically what we're doing is identifying these peaks and valleys here. Here's another example that's, you see a little bit more frequent oscillation here. I'm trying to give you an example of a trending market and a market that's kind of broadly ranging. Okay, ranging is like a flat market. It means that it's not doing anything sideways. Next, we have the OBV. Okay, and the reason why I'm going over all these, we'll get to in a second, is because when you pair them together, you get a more complete picture of what's going on. So we have broadly, we have an uptrend here, but notice that we have some volatility, some craziness here. And this indicator is basically zero fucks given. It just keeps trending upwards, okay, because it understands that despite this noise here, the broad trend is bullish. Okay, so the long-term momentum, that's the OBV, that's the blue line, that one is going to agree with the overall trend. Okay, so here we have some oscillatory stuff. So never mind these peaks here. Basically, what we want to identify is that the indicator is flat. Okay, so despite these things, this was basically some massive momentum that came in and kind of skewed it. But overall, we have a flat OBV, which is telling you that we're ranging. And again, if you didn't notice, we're referring to the same charts here. So you get a broader picture of what's going on with a specific example. So some tips to trade. You always want to buy the dip or sell the rally. Okay, I can't really stress that enough. If you are getting bored of me saying that, then that's good. That means that you are understanding it. Okay, so you want to look for a divergence between the long term and the short term. What do I mean by divergence? I mean when one is doing one thing and the other is doing a different thing. Okay, so for example, when the Kovac Chan dips, but the Kovac OBV is still positive, that suggests that we see overall buy side momentum, but we're seeing a little dip that we could potentially go for a long trade. That would be a buy signal. It confirms a dip. However, again, the tool isn't magic. I'm not a magician. You do have to watch out for reversals, because if you see a big dump come in, a huge sell-off or a squeeze, what we call a squeeze, when the weaker hands get wrecked, that could cause the asset to reverse. Okay, so you do have to be careful about that. Again, can't stress this enough. It's just a tool, but it does help. So it also gives a hint about the opening day type. Again, open drive up, open drive down. Those are things that we cover in the 12-week trading program. Very, very useful analysis for how to get kind of like a framework of what the markets are doing in a particular day. And we use the Kovac momentum for that because we're looking at those short-term spikes, right? Those impulses of momentum coming through. So what does this indicator say at open? This would be a trading idea because it may give you a hint about the day's conviction. So if there's a huge amount of momentum at the open, that potentially could last for the rest of the day. Okay, the reversals. This is a great indicator to complement the others that I talked about earlier. This measures volatility and also applies candlestick patterns. Candlestick reversal patterns are very useful in trading, but there's like 20 of them, right, or more. Okay, and so it's very, very difficult to keep all of these in your mind and represent, oh, and to be able to see, oh, hey, that's a key reversal, that's a 2-bar reversal, that's a morning star, that's an evening star, that's a doji. I mean, there's a lot of them. Okay, so what I did is, again, I did that work for you by sitting there and painstakingly programming each and every one of these indicators in. Okay, so I did that by hand. All right, and basically the every time you see a red triangle, that is, or a green triangle, that's an indication that you see one of these candlestick reversals, and they're at kind of an upside, an extreme of the volatility. So tips to trade this can help you identify dips and reversals when the trend changes. And it works best when paired with momentum indicators for confirmation. So here's a great example of when the red triangles are helping you identify dips in trending markets. So as we see here, the overall trend is upwards. You never want to just FOMO into a trade. We call that FOMO. That's fear of missing out. That's when the markets are trending up and you don't want to miss out on the party. So you just guerrilla your way in. And typically you do that right before a nice retracement, just enough to wreck you. So what this indicator does is it's not necessarily, it's tempting to think it's a sell signal. It's not. It's actually just telling you when we may see a dip soon. Okay, so notice when pretty much every single time we have one of these indicators, it's like an omen that you might have a reverse or a retracement soon. Okay, so if you're looking to get long on a position that you're pretty sure is trending upwards, this indicator can give you a heads up. That's all it's supposed to be, is a heads up. Okay, the red and green triangles here portend mean reversion in ranging markets. Okay, so when the markets are ranging, that means they're just kind of chilling sideways. They basically ebb and flow back and forth. Again, that pendulum kind of effect, because the markets see relative value in a relatively narrow area. Okay, so the markets are kind of going to bounce back and forth between those. So as you see here, if you identified this as a ranging market, these are actually my favorite markets to trade, by the way. Because you could basically ping pong this. Okay, so these indicators are helping you. At least here, we had some really good opportunities that it helped to identify. So the trading strategy, you want to use the OBV to identify direction. Okay, so all of this isn't just for my health. I'm not sitting here, just talking about the indicators just for the sake of doing that. We're all here because we want to do better trades. Okay, so this is a trading strategy that could really, really help you. First, you want to identify the direction. Okay, so you want to see what the blue line is doing, the OBV, right? Because you want to see where the markets are going. Next, you want to identify retracements to enter a position. So you want to look for divergences in the OBV and the Chand. So that is, for example, when the OBV is going up and the Chand dips, or conversely, if the OBV is going down and the Chand has a little upswing. Okay. And also you can pair that with red and green triangles on the Kovac reversal. So you basically have like 4 tools at once working for you. You have the volatility component of the Kovac reversals, which is telling you how far we are on that kind of volatility spectrum. You also have the candlestick reversals, which are identified for you. And next you have the 2 momentum indicators, which are helping you identify the broader direction of momentum, as well as the, when it swings back and forth, that ebb and flow pendulum effect, so that you can help identify the retracements. So note the KOBV and the Chand are not crossover indicators. So those of you who are new to trading, you may have heard of what we call a crossover strategy with moving averages. So when you have a moving averages that's longer, that means it's taking more data, and we have a cross between a shorter moving average that reacts more quickly to the markets, that could be a sign that the market direction is changing. This is not a crossover indicator. We're not looking for when these indicators cross. We're looking at when their behavior changes. So again, don't look for them to cross like moving averages, for example, the golden cross or the death cross. Look for when their directions change. So next, combining the indicators, we'll show you some examples of how that works. What I like to do is merge them. So if you haven't merged them on TradingView, that may help you save some real estate on your chart. So basically here, this is a great example, again, referring back to that, rally in the stock market that we covered earlier. We have, I've identified the key components of this chart for you. So basically we have a red triangle that we've identified here, which is a heads up that you may have a retracement. We also have a peak here in the chant, again, might be telling you that, the pendulum is at its maximum and it may swing back. Okay, next we have a dip that's kind of roughly coincides with this dip in the chant, and we see it kind of start to upswing. Of course, you want to combine these with other things like levels, okay, Fibonacci levels, moving averages that can provide support and resistance. So, you don't want to just rely on one thing. Levels are very, very important in trading, and maybe one of these days we'll do a boot camp on how I approach them. So anyway, you want to identify this dip to buy, and these indicators are doing everything they can to really help you, give you the best idea of where that is. We see another example here where we have this little retracement, and a final example here where we see the red triangle here and then a dip. So the trading strategy would be to use the Kovac OBV. Let's see, is this a repeat? Looks like I have the same slide. Oops, sorry about that, guys. The Kovac reversals indicator helps identify mean reversion trades. Okay, so you notice here, both the momentum indicators are flat. Okay, what that means is there's not very much buying or selling in the markets. Okay, so that means that the markets are trading flat. And again, we call that ranging. So the Kovac reversals indicator can help you identify where those boundaries are. Okay, so you can kind of ping pong that. And finally, here's a bearish example where the Kovac reversals indicator suggests that pullbacks are near. Again, that's with the green triangles here. The Chand confirms that, let's cover the OBV first, right? That's the first thing you want to look for. We're clearly in a bear cycle here, a downtrend, and that's, represented here by that indicator. But we see peaks corresponding to peaks, it's like the same thing as pullbacks in a rally. Just turn it upside down, because the selling pressure eventually has to let off a little bit as people take profits or get out of their positions. Okay, so this is what this indicator is helping you do. So a summary, okay? So when the Kovac OBV and the Kovac Chand are overbought, and I know McJoysticks is one of our new users, and he showed me a great example of this, where both it was trading Litecoin, which is one of the products I like to trade as well. So basically, both of these were in the direction, in a downward direction, right? So when you have that, okay, you might think, hey, the markets are going down. This is a sell signal, and that's actually not true. Okay, so when both of the indicators are in strong agreement, what that means is that the pendulum has swung, okay, and it's probably going to dip. Okay, so I helped set McJoysticks up with a good trade in Litecoin based on that principle alone. Okay, so again, when these guys are both in the same direction and that's kind of strong, you are anticipating eventually the Chand to kind of curve and to dip back. Because remember, the Chand is an oscillator. It goes back and forth like a pendulum. Similarly, when we're oversold here, both indicators are going to be bearish. And here, the key thing here is that when they are different, okay, so when the Kovac OBV is going up and the Chand is down, that might be a dip to buy in a bull trend. And similarly here, if we have the Kovac OBV going down and the Chand going up, that might be a rally to sell in a bear trend. Okay, so here's a live trade that I actually made using the Kovac momentum. This is a short-term momentum indicator. Stocks open near all-time highs. It will take some momentum to make new all-time highs. So that's just a general principle in trading. Okay, when you're near all-time highs or a significant high or even a significant level, it's going to take, it acts like a barrier. Okay, so it's going to take you some momentum to really punch through. So basically, if we see that, momentum, the Kovac, excuse me, the Kovac momentum indicator should register a large spike. Okay, so that's kind of like the background here. That's the homework that I did before the trade even started. Okay, to get a picture of what the market should do and to see, based on what the indicators are saying, what they actually did. So here is this is where I was at when I took the picture. Obviously, we have the S&P at all-time highs, and so I know that it's going to take a bit of momentum to break through. Additionally, we have this kind of upswing here, so we might be kind of petering out in strength. Okay, so unless we can really muster some momentum, it's probably going to retrace. Okay, so note here, the Kovac momentum indicator is completely flat at open. What is that telling you? It's telling you you're not seeing that impulse, that buying frenzy that you want, that you expect. And sure enough, we have a rejection. Okay, so as this trade evolves, okay, we see the Kovac momentum registering the sell-off. Okay, so in fact, we didn't see the momentum that we needed to punch through that high. In fact, we saw the opposite. Okay, so this is starting to register that momentum. And then finally, you see it letting off here. Again, it's an impulse indicator, right? So this thing, as this is happening, you're going to see it react in real time, and that's what it should do. Okay, so here was a great take profit because I see this trend line here in the middle. So that was a good 10, 12 ticks there. Okay, the crypto specific indicator. So I guess at this point I can open it up to questions. If you guys have any questions about the indicators, I know some of you have been using them. Really happy to hear that, and I'm really happy to hear about your successes. So if you want to ask a question or share a success story, or even better yet, share maybe one where you weren't successful, so that I can help you understand them better. And it's okay if you don't want to pop on in the Zoom. By all means, feel free to DM me, or better yet, ask the question in the channels so that others can benefit from it too. Okay, because if you have a question, probably somebody else does too. So really appreciate that. Okay, so the crypto specific indicators, I don't think I spend too much time on these because we still have to get into the Ghost Squawk terminal. So these are again crypto specific indicators. I'm a big crypto trader, so obviously I'm going to make indicators for that. We have the Kovac altcoin index. That is a weighted index of the top 5 altcoins. It's like the S&P for stocks. Okay, so it's really important to understand what indexes are. So what that is, it's like a weighted measurement of a bunch of things. Okay, so you can't actually trade the S&P directly. You can't trade the NASDAQ directly. They are just measurements. They are numbers. Okay, now that being said, you have certain ETFs or futures contracts or options or other crazy things, CFDs, that you can actually trade them with. But when you trade the S&P, you're not actually buying 1/100th of Microsoft or 1/200th of Apple, which is what that index represents. It's a weighted measurement of all the stock prices, okay, weighted by the market cap. So basically, I took that concept because it is very useful. So I took that concept and applied it to cryptos as well. The Kovac spread indicator, this measures the difference between Bitcoin and the altcoin index. Okay, so typically, in a healthy crypto market, you often see profit taking from Bitcoin into other altcoins and vice versa. So that's kind of what this is telling you. So you want to look for the tide to turn between Bitcoin and altcoins. You should be recognizing this theme already, this kind of ebb and flow type theme, okay? Because you never make money by FOMOing in on a rally, or if you do, you're lucky. Okay, that is not a consistent strategy. That is not something that is going to work in the long term. You want to identify those price swings and when the tide turns between the two. Okay, and this typically happen. This is typically when one rises and the others fall, with the exception sometimes during the crypto winters or when people are pulling out entirely. That relationship isn't as strong. So tips to trade: you use the Kovac spread indicator to identify when to take profits and when to consider buying the dip, and that is when the divergence in the price piece reaches a peak, and it typically reverts. So, okay, so just to recap all this, basically the pros and cons of this. The pros are it's well documented. I have a lot of blog posts. It was on my Quant Guy site that I shut down. So I'm going to make sure that we feature those on the blog for Ghost Squawk. We have YouTube tutorials. I know I've sent a lot to you guys in the channels, but if you want more in the FAQ in Ghost Squawk, I think it's Ghost Squawk info. There's an FAQ. Okay, so frequently asked questions. You can scroll through this. We have all sorts of cool stuff for you guys. Recommended brokers. We have trading tutorials, free trading tutorials, and of course we have information on the indicators there. Now, the cool thing about this is it is a Ghost Squawk exclusive. Nobody else has these indicators but the people who are subscribed. Okay, and what that means is that if you use like a more common strategy like moving averages or Fibonacci's or something like that, based on where you put your stop loss, other people are doing that too. Okay, so a lot of times, the other traders, other bigger traders, they know that too. Okay, and they have a lot more experience and money than you. So what they'll try to do is they'll try to push your trade in the direction of the stop loss, and we call that stop hunting. Okay, so with these indicators, it's a little bit harder for them to do that because they're not necessarily available to them. And this applies, so again, it applies advanced math and boring stuff like that, and optimizes the indicators. So the cons, again, no indicator is magic. So don't come to me with a noose in case you took a trade and you lost money. Because again, really what I'm focusing on, what I want you guys to do is start applying risk management. Okay, you could have a losing trade that's still a winner, in my book anyway, if you've applied risk management properly and consistently. Okay, so don't just rely on the indicators. They're not magic. You need to combine these indicators with your own market research. Okay, so do your own technical analysis, draw your own levels. We do have a levels indicator that is coming, but it's not ready yet. So do your own research and make the trade yours. Okay, so the Kovac indicators conclusion. The technical indicators can provide you with a signal to enter or exit the markets, but you must test them in various market conditions and timeframes. The Kovac reversals helps identify the volatility and potential reversals. The Kovac momentum indicator helps, indicators plural, helps identify short, medium, long-term momentum, and combining these indicators can provide more information, more confirmation of a stronger signal. Okay, so Ghost Squawk Terminal, this is where I'm going to leave off and hand it over to Chen.
I jump in.
Yep. So I guess Chen, let me stop sharing. Okay.
Let me share my part.
And it's all you, buddy.
Can I share?
Oops. I should do that, shouldn't I? Huh. There you go.
Here, that, and boom. All right, guys. So, along the lines of what we're trying to cover here today, with regards to giving you guys more information about everything that we've set up, I always get the questions of how can I do better market research? What do I recommend for market research, searching information on companies and things like that? And so what we've done is we've started building bots on the Discord server, which we like to call the Ghost Squawk terminal. And the bots themselves are there meant to enrich your trading experience, right? And the reason why we're doing this is professional news services, if you guys work in the banking industry, like Bloomberg Terminal, they cost $3,000 US per month. Other competitors like Reuters Terminal costs about $1,800 per month. And what we're trying to do here with the Ghost Squawk Terminal is effectively provide you guys with a tool that will allow you to aggregate all of your market data and news into one source. And all of these functionalities are bot functions that we've developed within the server itself to help you pull up information on pretty much any asset class you want, from cryptos to forex, bonds, stocks. You want to pull up news, you want to pull up charts. You can do all of that with a few short commands. So let me give you guys a couple of examples of what we're doing here. So we effectively have the Ghost Squawk AI charting bot and the Ghost Squawk stock AI as well. In addition to that, you'll also notice that if you go into specific channels like forex, you'll see forex quotes here. If you go to the stock channel, you'll see stock quotes for the S&P 500, Dow Jones, NASDAQ. If you go to cryptos, you'll see bots that will be tracking crypto prices in real time. We've developed a lot of these bots in-house, and we paid a lot, we paid bot developers and put in a lot of resources to get all of this information here. So the basic idea here is that you don't have to go anywhere to find any of the information that you're looking for. So what are the bots? The bots add functionality to the Discord just by learning a few short commands. They provide value to the community itself. It brings up information that you want that will help you, make better decisions in the market. And you can do this just by typing a few short commands. Commands are case sensitive, so once you understand how to implement them, you should be able to put them into the server itself and then pull up information. All you have to do is just understand the special syntax and the bot prefixes that will allow you to pull up this information. So the Ghost Squawk AI charting bot, it plots charts, it plots heat maps, it has innovative ways of visualizing cryptos in order book format, and it can also put on indicators on the charts as well. So the prefix itself is you have to do something like this here. So you have to enter the prefix cyber and then underscore or psi underscore or any one of these. The heat map commands, you do this. You type in heat map or HMAP or HM. And for trading view commands, you just type in TV charts, chart TV or C. And these are some of the prefix structures. So I'll show you guys some examples of this here. Okay, so for cryptos, if you want to pull up like a chart on something like like Ethereum, we can pull up a heat map chart just by pressing some commands here. And these commands will pertain to several things. So just wait for a second for this to pull up. And boom, here will be our chart on Ethereum. Now, what this command is basically doing is that this command, the !HM, is bringing up the chart. The chart is coming from BS, which is Bitstamp. The chart is on Ethereum as denoted by E, and then the hour is 4 hours as denoted by 4H. So once you get a feel for these commands, you just kind of like input them, and they will pop up, giving you information on pretty much any asset class. So like another example of this, you type !. So for a lot of you guys who do this on your phone, it does work on your phone, but you have to be aware that when, I don't know for you guys, but for me, the first letter on my phone is always capitalized. You want to make sure that you don't capitalize the first letter, and then it should work. So you type in like a command like this. Again, this will pull up the command for this bot. BS stands coming for Bitstamp. B is for Bitcoin, and then 4H is for 4 hours. And this again will pull up a chart of Bitcoin over the last 4 hours for you guys. So there's many examples of that. We do have different examples of charts. So you do like cyber underscore HM, and then we'll see what this one does. And here we'll pull up another different style of chart that provides like a different visual on this. And you can see here, this has like more of like a heat map on the order book for Bitcoin. There's also some other interesting stuff. Like for example, you can pull up a 3D order book. So you do X exclamation mark CD, BTC USD, and then that should pull up some interesting order book chart on Bitcoin. Let's see if that works. Let me try this one.
Guys, if I could jump in here, basically these are bots. Okay, so sometimes there is a little bit of a lag depending on the network and all that kind of stuff before the data can be transmitted. But for the most part, they work pretty well. Now, what's going to happen? Yeah.
No. So this commands, feature limited once every 3 hours. Yeah. So it's again, I mean, a lot of these commands, like we're using free data to aggregate it, so some of them may work, some of them may not work. So please bear with us. We're trying to make this more refined product in the future.
Yeah, so I can talk to that. So one of the huge goals, I guess, for Ghost Squawk is, again, we're using a lot of free stuff, giving you basically aggregating all these free tools for you so that they're in one place. Okay, the next step is to make our own. Okay, so there's going to be no more rate limiting or anything like that. But for now, at least you have a tool. If you could kind of bear with us for a little bit, this is part of the free model, right? So, you get what you pay for, but you guys are going to have specific functionality that is only accessible to you. Okay, so the free people won't be able to use it. So just keep that in mind, but we're working on it.
Yeah, Danny, can you do you mind taking care of the next one? I gotta take a call real quick.
Okay, sure.
Yeah, sorry about
that. Okay, let me 1 second here. Can you stop sharing? Okay, so which one were we at? Sorry.
We are at the trading view charts.
What number?
82.
82. Okay, cool. Okay, so this okay, so basically here, make sure I'm audible. Okay, let me share my screen. Okay, so basically here we're using the Discord terminal, or the Ghost Squawk terminal, as we call it, to plot charts from TradingView. And we could do that with cryptos, forex, and stocks. Come on. Okay. You're good?
I'm back if you, yeah, I'm back if you need.
Okay, cool. Yeah, go ahead. You can take it from here.
Okay, we're at 83. Yeah, sorry about that, guys. I had a call coming in, so here. Okay. Do you guys see my screen? Do you guys see the Discord?
It's not Discord. It's
is it the chart?
It's the chart. Yeah, it's the PowerPoint.
PowerPoint. Okay, hold on. Okay, so
there we go.
Yeah, so there are many other examples, like the examples that we showed you a moment ago. Those were more crypto specific. These examples here would be more like for stocks, forex, or anything else, right? So you can pretty much pull up information for anything, right? And this is what I was talking about earlier about not having to go to another website to do your research, not having to go to TradingView to look at a chart after you've done your research. Everything can be done and aggregated onto one platform. So the command that you guys should be very familiar with is !C, right? This here will help you pull up any chart. So if you do !C, it will pull up a chart, but the charts are blank. What you need to do after !C is you need to put in a symbol. So if you put in like Tesla, we'll be able to pull up Tesla chart right here. Now, if I do !C and then I do Tesla symbol again, and I type in the time frame. So let's say I want a 60-minute chart. If I type in that, I'll be able to pull that up with a 60-minute chart. Let's say if I do that same thing, Tesla on a 240 chart, and I also want RSI on it. Right? And then
wait. You missed the A in Tesla.
Oh, okay. Oh, 3 island steel. Oh, okay. different symbol here, but again, same idea, right? I mean, like you'll be able to pull up the chart of whatever company that you type in. It'll be at 4 hours, and then we'll get this here with it. So these are like very valuable commands. I'll help you do like very simple research, right? Like any stock that you want to look at throughout the day, you just want to pop it on, boom, you'll be able to find it, no problem. There, like we have many other, like, you know, like you can pull up anything like an index, currency, like works for currencies as well. Like oops, you can do USD 30-minute with RSI and a map and a like that, boom. And then there, we'll be able to pull up charts like that. So it's very good information. You can pull up like fundamentals of stocks. Like for example, you can do for just general information on, you know, like Microsoft. We'll have some general information on like the highs, lows, volume traded, the float, etc. If you want like a bio, let's do bio of, you know, American Airlines. Boom, you get a quick bio. You can do like many interesting commands like TA on American Airlines. We can also do financials. So if you do TA, you'll be able to pull up technical analysis levels on American Airlines. If you do financials, you'll be able to pull up financials on it. You know, there are many interesting commands here. Obviously, we're not going to go through all of them because there's like hundreds and hundreds of commands. But there are many interesting stuff that you can look for. If you're an options trader, you know, you can look for like insider information from for any particular stock. Okay, let me count here. Okay, well, I'm not gonna fret on that. You want press release, news, additional information, they can all be found through here. Obviously I'm not going to go through all of them, but that would be the general idea. You know, you can pull up a lot of valuable information just by going through a lot of these commands. And if you guys are interested on the commands and the command list, because there's so many of them, right? I recommend going to this channel right here. We have this channel called the Discord commands list, and this is what you should be looking at. Here we have cryptos, so you can find all the crypto commands here and how to write it. Forex, all the Forex commands are right here. Futures, all the futures commands are right here. So you can see what these are used for and then the commands, right? So if you want like a calendar on the day, you know, you can type in those commands. Macro fundamentals, if you're looking for yield curve, if you're looking for heat charts, daily gainers, daily losers, you know, information on stocks, they're all right here. And I highly encourage you guys take advantage of this and use this as much as you can to make the most use out of this. Anything else that you wanted to add to this, Danny?
I think that this is a great spot to conclude. Basically, you know, again, we keep adding new functionality to this, the ecosystem, as we call it. So, you know, we want to keep you guys up to date so that you get the most out of your subscription. Okay, so the Discord bots is a huge thing. Also, if you could help us out, we have a channel for bots. Can you show them real quick? So, and we have that just so that, you know, if you're researching a stock or something like that, you know, you don't flood the channels. So, you know, it might help everybody out if you kind of use that channel.
Oh yeah, you can just input it here in like the technical charts.
Yeah, technical charts or something like that.
People are using this for just inputting commands here.
Yes.
It's a great place to just go here, you know, type in all the information that you want and, you know, do some individual research here.
Yeah, but yeah, I think that that's a good conclusion. You know, again, feel free to reach out to us in the messages if you need help on anything, or again, better yet, post it in the channel so other people can benefit from it. And if you haven't gotten access, say, to the indicators or something like that, please let me know, because again, we want to make sure that you guys get the most for what you're paying. And aside from that, that's pretty much it. Don't forget
Yep. Danny, I think if people haven't subscribed yet, they can just reach us out.
Yeah, and if you haven't subscribed yet, you can either reach out to us for the link for more information about what what comes with it. But basically, there's just the a membership link. It's really easy to sign up. Also, don't forget tomorrow at 11 a.m. we have another boot camp. Okay, so Bostalgia is going to be speaking to you, doing a second round of DeFi staking and NFTs. Okay, so we're actually going to do and I'm just talking about this now, so you guys are hearing it first. We're going to do a private NFT auction for everybody. Okay, so really, really important stuff. Really, really good breaking news. I'm going to make the everyone announcement after this. But if you guys are free tomorrow, and again, this is free to everybody, but you guys will have access in the Zooms, access to asking questions and stuff like that. Really, really good stuff if you're looking to get into crypto and DeFi staking in particular. Might be a good, definitely one that you want to see. But aside from that, that's pretty much it.
All right, you guys have any questions for us?
Not at the moment. I was just struggling with my indicator. I'm dying to use indicators, bro, but we'll sort it out. I'll message afterwards. I'll message one of you guys.
Yeah, I know that you were having some issues earlier. Please, yeah, let's work through it together. Really sorry about that. Sometimes
it's not you. It's not your fault.
Yeah, a lot of times we have issues on the trading view end. And so, for example, when I've added some people, they don't see it, so they have to log back out and log back in again. It's a little bit of a pain in the butt. So what we're working on is integrating those into the website, but that's a work in progress because we have to get the data from somewhere.
You know what I did notice is there's an expiry date on them for some reason. Like
Oh,
the expiry, yeah. I don't know why that is.
I see. I might have forgotten that on your account. Really sorry about that. I'll remove that. No, but I'm pretty sure with you. I'm pretty sure I didn't. Anyway, we'll look at it together. I'll make sure that's corrected.
Thanks, Daniel.
Yeah, thanks for bringing that up to me. And it's the same with anybody else. If I was an idiot and put an expiration date on yours, please reach out to me. No problem. Fix it for you.
Sweet, man.
Okay. Anything else?
All right, guys. Have a great afternoon, everybody, and see some of you guys tomorrow for the DeFi Bootcamp.
Yep. Take care, guys.
All right, y'all. Take care.
Ciao.
Yep.
Cheers, guys.